Hello and welcome to the Gold and Silver Club Weekly Commodities Review presented by myself, Phil Carr and Nick Kelsey at the Gold and Silver Club. Today we will be reviewing the latest developments in the commodities markets. We'll be analysing the week's performance. The live session will be covering an end of week summary for the metals, the energies, agriculture. We'll look at the top trades of the week. We shall be covering live market commentary and technical analysis. We'll also look at the week ahead, so key events looking forward, and of course we'll be answering any questions you may have on today's session as well. So first up, gold has been trading near 8-month lows on Fed speculation. So gold price traded near 8-month lows on Friday, a speculation that the Federal Reserve could raise interest rates sooner than anticipated continued to weigh on the precious metals. Gold prices weakened after a study by the San Francisco Federal Reserve suggested that the Fed could signal a rate hike at its policy meeting next week, scheduled for the 16th to 17th of September. Elsewhere in the energy markets, natural gas prices broke above $4 on Tuesday on heat and demand optimism heading closer to the cooler months. Reports this week suggested cooler weather forecasts across many parts of the US. Temperatures in the upper Midwest are expected to fall as much as minus 15 degrees below normal, which is getting commodity traders excited at the prospects of early season heating demand. Also, natural gas stockpiles are still catching up from last winter's heavy rain, which suggests that inventories are likely to start the winter at 8% less than 5-year average. This means there could still be further upside for natural gas prices as we approach the winter season. And on Thursday, the USDA reported in its monthly crop report that yields in the US, the world's largest corn producer and exporter, will reach 171.7 bushels an acre, which would break the record of 164.7 seen in 2009. A bigger than expected harvest is viewed as bearish for corn prices in the near term. Reports this week have presented commodity traders with multiple lucrative trading opportunities, as highlighted in our top trades of the week. Before we go on to our top trades and look at the live technicals, I'm Phil Carr, professional trader, trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialize in teaching people how to make money from trading the most lucrative financial markets in the world, so gold, silver, oil, natural gas, the agricultural commodities. I've trained thousands of individuals to become independent traders and successfully manage their own investment portfolio, and I'm responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars, webinars and workshops. Joining me in running the Gold and Silver Club is Nick Kelsey, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, Nick spent several years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks, and through his first-hand relationship with some of the world's most successful traders, discovered the formula, mindset and tools that can give any individual the definitive edge to trade in any economy. Also regularly writes for a number of global business and financial publications who have appeared frequently on financial television. So we'll have a look at the price of gold right now. We're currently trading at 1,233 US dollars per ounce. So we're just off the 8-month lows here. We've actually just broke down to $1,230. So we'll have a look at the technicals very shortly. Before we do so, we'll take a look at the top trades of the week using the Gold and Silver Club's signature trading strategy. So those are as follows. First of all, we have platinum, which over the last week broke down severely once we broke through 1,400, so 1,400 US dollars an ounce, and we've come down and hit one of our first profit targets here at $1,369 for a 300-point trade. The risk on that 100 points, so a 3-to-1, $1,000 risk for 3,000 US dollars reward. We had a nice day trade yesterday on WTI crude oil. The risk on the trade was 75 points, so 750 US dollars for each lot, traded for a profit of 150 points, so 1,500 US dollars for a 2-to-1. And we also had a lovely sell short opportunity yesterday on the natural gas storage inventories. The risk on the trade, 60 points, so $600 for each lot traded for a profit of 110 points, so 1,100 US dollars profit for a 2-to-1. Right, so we'll have a look now at the technicals and we'll see how the markets are looking this afternoon. So first market we'll actually take a look at will be platinum. So we discussed this last week. We're looking at the major zone of 1,400 US dollars an ounce on platinum to see whether we would hold or get either break this level or we would get supported. We did break, we triggered our sell short. You can see the market has now come down to $1,360 an ounce. We are closing near enough at the weekly lows here. You can see technically there's been some damage done to the chart here, and we're nearing the 1350, which is a key psychological support zone for platinum, which is probably where we may in fact find some support. You can see previous swing lows going back on the charts to September last year and also January earlier this year around the 1360 level, and we're currently at 1357. So we would see the next psychological support zone just below here at $1,350 an ounce. So platinum, there's been some great sell shorts. Silver has continued to maintain this very strong downward trend, which has offered us a lot of opportunities just to continue this trend. The trend is your friend, and we've seen a lot of continuation with this sell short pattern. We've got a very clear resistance channel and a support channel which has just continued to break down since July here. So you can see we're right at the lower end of this channel at the moment. We are coming into a support zone for silver, similar to gold right now. You can see we've actually come down, we've tested 1847. The lows here really to break would be around the 18 US dollars an ounce level, which would cause us to fall to 4-year lows here on silver. So we are at the moment holding on to these key support zones. Currently at 1850 at the moment for silver. So we will keep an eye on this on the daily. Of course, we've got the Federal Reserve announcement next Wednesday, which is likely to cause a lot of volatility. We would expect a little bit of profit taking here on silver. We're right at the lower end of this trend channel. You can see a hammer forming on the daily where there is some profit taking here, and this will be very interesting to see next week whether we just get a rotation back up to the resistance zone and then whether we see further selling into the FOMC. Gold, very similar situation. Gold's actually come down and tested just in the last 10 minutes or so, $1,230 an ounce. This is the next key zone really for gold to hold at the moment here, the 1230 zone. You can see this was a swing low going back to January 2014. We had quite a lot of consolidation around this this support zone earlier on in the year, just in the end of December and also in January when we bottomed out at 1180 again. So this key zone we're in at the moment, 1230, again, we may well get some support here and some profit taking. We broke down to a key support zone of 1240, which was the support just before the FOMC statement in June. So we have broken down lower here, and we'll see whether 1230 holds today or whether we get a continuation. If we do break 1230, we really could have a good run of the 1200 zone here. So the next big move is likely to be on the FOMC statement next week, but certainly we've seen a lot of weakness on the metals this week. Another metal which is broken down in style has been palladium. If you look at palladium here, we are just on just going out technically to historical charts. You can see here that we've got a very key trend channel which is broken down. So this trend channel was in place for the last 4 months since March, and just this week we broke the lower end of that trend channel. In fact, we've had a 700-point pullback here on palladium. In fact, we've just broken down in the last hour or so a little bit lower, so it's now 800 points that palladium has moved to the downside since it broke out to 13-year highs, coming up to 910 US dollars per ounce. So again, the spotlight for the metals will definitely be the FOMC statement next week, so we'll see whether we get continuation and further breakdown or whether we do come into some support here and see these as good value buys. So definitely want to keep an eye out for on the Federal Reserve statement next week. Also looking at the energies, so natural gas, it's got a key trend channel at the moment. If you, I'm just on the futures contract, but if you go out to historical chart, there is a key level where we're finding support today for natural gas. The storage inventories yesterday were bearish. We had a quick day trade and opportunity to sell, but we're getting some support just at the moment, which we may get a rotation higher again. The fundamentals are certainly there. at the moment for higher prices for natural gas. If we take a look at light sweet crude oil, continuing to follow a fairly strong downward trending channel here for light sweet crude oil. We did break down lower this week. We had some day trade opportunities for counter trend trades just yesterday here. We've come close again to the upper end of the trend channel, so we may get more weakness. We really need to see how light sweet crude oil will close today. Also, Brent crude oil as well, you can see we're just on the futures contract again, but very bearish over the last few weeks. Again, there's been a lot of opportunities to sell short within this market, particularly last Friday in non-farm payroll. We had some great sell short opportunities. So for those of you who joined us for last Friday's session, we took some shorts there on WTI and Brent, which both delivered and came back to their support zone. So again, we're looking a bit bearish here as we approach Friday afternoon. So we will be looking for potentially to take out yesterday's lows here, which would be circa the 96. Let's just check these levels for you. We'll be looking at taking out 96.72 here for Brent crude oil in order to get further momentum to the downside. And also moving across to the softs here, wheat is just about to trigger actually. You can see we've got a mother candle here we're looking to take out at the 502 zone. Also, if we break through the 500 zone here, the psychological support, we could really get more downside. Corn as well has finally broken through this consolidation zone. So 347 we broke through last week, and we've just continued to take advantage of retracements and the continuation of this breakdown in trend. We're below a lot of the key indicators are indicating short key moving averages, and we just would believe the trend to continue for the time being. We would see this trend and this trend channel here continuing to sell off in the short term. So we are looking to capitalize on sell shorts of both corn and wheat at the moment, again supported by the fundamentals. You can see here actually wheat is about to break through. This is yesterday's low here. You can see we're just about to break through here and could offer a nice sell short. So if you do trade the softs, definitely you want to be on the right side of these trades at the moment with corn and wheat. Right, what we'll have a look at now is we'll have a look at the major news announcements as we come into next week. So the key events looking forward which will affect the commodities are as follows. On Monday the 15th of September at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the New York Empire State Manufacturing Index. The Empire State Manufacturing Index rates the relative level of general business conditions in New York State. A level above 0.0 indicates improving conditions, below indicates worsening conditions. A higher than expected reading should be taken as bullish for the US dollar, and a lower than expected reading should be taken as bearish. Tuesday the 16th of September at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US PPI. So the Producer Price Index PPI measures the change in the price of goods sold by manufacturers. It is a leading indicator of consumer price inflation, which accounts for the majority of overall inflation. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. Wednesday, the 17th of September at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US crude oil inventories. So the data reports the number of barrels of crude oil commercial firms have in their inventory. Commercial firms, of course, report those levels to the Energy Information Administration on a weekly basis. A higher than expected reading taken as bearish for crude oil prices, while a lower than expected reading should be taken as bullish. And then Wednesday, the 17th of September at 8 p.m. Central Africa time, 2 p.m. Eastern time, we have the big one. This is the FOMC statement. So this is the primary tool the FOMC uses to communicate with traders about the monetary policy. It covers in detail the factors that affected the most recent interest rate decisions, along with commentary about economic conditions such as the future growth outlook and inflation. The statement is followed by a press conference with Janet Yellen, and the questions often lead to unscripted answers that create heavy market volatility. That will be a major announcement next week on Wednesday, definitely one for the diary at 8 p.m. Central Africa time. And then Thursday, the 18th of September at 2:30 p.m. Central Africa time, 8:30 a.m. Eastern time, we have the US initial jobless claims. That data measures the number of individuals who filed for unemployment insurance for the first time during the past week. It's the earliest US economic data. Week-to-week numbers can be volatile. A higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish. And then Thursday, the 18th of September at 4:30 p.m. Central Africa time, 10:30 a.m. Eastern time, we have the US natural gas storage report. So the Energy Information Administration, the EIA natural gas storage report, they measure the change in the number of cubic feet of natural gas held in underground storage during the past week. This is a great trading opportunity. A higher than expected reading should be taken as bearish on natural gas prices, while a lower than expected reading should be taken as bullish. So those are the major news announcements you really need to take into account next week for trading the commodities. And if you'd like to find out more about how to trade the FOMC with the Gold and Silver Club live, and to find out about our upcoming courses, you can very simply learn about how to learn about trading commodities with the Gold and Silver Club at our training centers and online with the following link. So just hop along to www.jointhegoldensilverclub.com or contact our Johannesburg office by telephone at +27 11083 8403. Just request information on the Gold and Silver Club coaching programs and live trading room. So very simply hop along to the website, and also make sure you subscribe to our newsletter. You will receive free weekly reports on the precious metals, energies and agriculture, as well as live market analysis and prices. So just go to thegoldensilverclub.com. Okay, I shall leave these contact details on the screen for you. Okay, so that is it for today's session. So we will we'll definitely catch you back here at the same time next week, and we look forward to hear from those of you who'd like to trade the FOMC with us live next week. And of course, have a great weekend. So good luck with your trading, and we'll see you in the next one. Thanks everyone, and bye-bye.